It's Monday, the 22nd of November, 2021. Welcome to the Fear and Greed Business Headlines, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
5 stories in 5 minutes. Let's get into it. Story number 1. There's some interesting stuff happening on the ASX at the moment. Macquarie Group is now bigger than ANZ. Telstra is again one of the top 10 companies in the country. Some of the miners have fallen away. As we emerge from COVID, Sean, it seems the bourse is changing as well.
Sure is. It's decidedly different from 12 months ago. The banks still dominate with 5 of the top 7 spots, but number 6 is now Macquarie Group, which makes most of its money not in consumer banking. Its share price is up 50% over the past year. It's now bigger than ANZ. 12 months ago, amid the pandemic with banks facing big loan losses, CSL was the biggest company on the bourse. Now Commonwealth Bank is number 1. Over the past 12 months, Commonwealth Bank's market capitalisation is up $30 billion. CSL is up $2 billion. The big miners are the stocks that have fallen down the rankings most. BHP, it's the same size as it was 12 months ago. Fortescue and Rio Tinto have actually gone backwards. Of the top 25, Newcrest Mining, the gold digger, has been the worst performer in terms of rankings, dropping 6 places to number 23, while oil and gas giant Woodside has dropped 3 places to 22. Transurban's down. Telstra, as you mentioned, Michael, has been a good investment, adding more than $11 billion. Doesn't matter. Well, it does in a sense because people buy top 10 or top 20 stocks. What it really shows is that you have to watch very carefully, not just sectors, but companies within sectors when investing. And the moral of the tale is there's no sure thing in the share market.
Yeah, absolutely. That's story number 1. On to story number 2 today. And Sean, we love a big deal. And there is no deal that has more drama than Crown Resorts at the moment. And late last week, private equity giant Blackstone bid again for Crown. What's the likelihood of success this time?
Well, the bid's worth $8.5 billion. It's cash. It's 15 cents more than what was rejected back in May. That takes it to $12.50, which is more than 5% higher than Blackstone's initial offer in March. Of course, 37% owner James Packer will be kingmaker in any deal. The recommendations of the Finkelstein Review in Victoria, which were adopted by the state government, recommended Mr. Packer sell his shares by 2023. This would be an easy way out. Given he was prepared to take $13 back in 2019, the price is getting there. All those things are positive. Now, Crown's share price jumped 17% on Friday to a 4.5-month high. However, there's still a few challenges there. New South Wales still hasn't handed Crown a casino licence for its Barangaroo operation in Sydney. The Western Australian inquiry into the company is ongoing. And of course, 3 weeks ago, the Victorian Royal Commission said Crown's conduct was disgraceful. This is a deal with many, many moving parts. It could go anyway.
Yep, and plenty of drama. All right, story number 3. We've been talking a lot over the last couple of weeks, Sean, about whether the housing market is cooling. Clearance rates fell further over the weekend, so it sure does look like that heat is starting to come out of the market.
It does. In Sydney, the clearance rate was 71%. In Melbourne, the clearance rate was 69%. Both those cities have a lot more houses on the market. There's also affordability issues. Fixed interest rates are rising. It really does feel as if the bubble's bursting a bit. I will just mention, though, Canberra's clearance rate was 86%. Brisbane was 83%. Adelaide was 80%. Some of those cities are still doing pretty well.
Yeah, that's right. Okay, story number 4. Now, I find this one extraordinary. Global wealth, this is according to consultants McKinsey & Co., has tripled over the past 2 decades, and China now holds the top spot, having overtaken the US.
That's right. It's hard to get your head around. 10 countries, China, the US, Germany, France, the UK, Canada, Australia, Japan, Mexico and Sweden, represent about 60% of world income. If you break it down even further, 2/3 of wealth is actually in property. Now, as you said, net wealth has tripled in the past 20 years, and pretty much the huge rise has been driven by property prices. Across all assets, prices are almost 50% above their long-run average. That, of course, raises the question of whether they're sustainable.
All right, story number 5, last one. Every year, Sean, the Governance Institute releases its ethics index. They've released it again for this year. I don't hold high hopes for the media, but let's start at the top. Who was the most ethical occupation this year?
Well, not surprisingly, those in emergency and healthcare, fireys, nurses, ambulance, those guys are at the top. Can't argue with that one. At the other end, the least ethical occupations are federal politicians, real estate agents and director of foreign companies. Maybe all those fights between big tech and governments didn't help those guys. Overall, our perception of Australia as an ethical society has dropped somewhat. Now, within business, corruption is the number one ethical issue, followed by misleading and deceptive advertising and company tax avoidance. But to your initial point, the most ethical sector overall is education, and particularly primary schools. No arguments, but Michael, the least ethical sector, according to the survey, but not me, is the media.
And I'm sure that excludes podcasts. All right, that's our top 5 stories in 5 minutes. Thank you very much, Sean.
Thanks, Michael.
It's Monday, the 22nd of November, 2021. Remember to hit follow on the podcast, and you can always find more information and interviews at fearandgreed.com.au. I'm Michael Thompson, and that was the Fear and Greed Business Headlines. Have a great day.